We also have Tracy Kroner, who is investment specialist, United Nations Capital Development Fund, UNCDF. Virtually, we'll have Jean-Marc Hilolo, economist at the United Nations Economic Commission for Africa, ECA, joining us virtually. And our moderator, her organization has a beautiful acronym there, ACT. Aspire Coronation Trust Foundation is the company, the organization for which she's the CEO. Let's welcome our moderator, Osai Alile. Yes. So we're going to 10:30. I'll be giving you the appropriate cues.
I refuse to call you the angel of death. I just refuse to.
Just angel. Just give me angel.
Angel is perfect.
That's it.
Good morning, everyone. We're excited to be here, and we've had a lot of conversations this morning, and I'm looking forward to also hearing from my panel. Today, our conversation explore the role of foundations and, of course, the development finance in addressing the different challenges we have in development finance and how we can build a pipeline for investment-ready businesses. And of course, we've mentioned the speakers. So
the UNITC, for example. So we support them to design and implement investor readiness programming and services.
all right, thank you.
Hi, good morning. I'm Tracy Kroner from the UNCDF, which is a hybrid organization that is both a development agency and a mini DFI, and I'm on the latter side of the house. And we have concessional capital, a facility that has about 34 million of assets under management. About 10 million of that is in direct lending to at the corporate level. And we also have two blended finance facilities that are capitalized at 50 million and 300 million respectively. And if I wanted to be parochial and provocative, I would answer the question, what are we doing to build pipeline? I'd say blithely nothing, because we, hearkening back to yesterday's panel, one of yesterday morning's panels, we're focused on execution, execution, execution. We're the investment side of the house. But before you throw me off the stage saying, why did they put somebody on a panel who has nothing about pipeline, who has nothing to say about pipeline? Let me say that I do have some practical examples to share with you later on in the panel. And but we rely on, spoiler alert, we rely on the development side of the house of our own agency and increasingly other UN agencies who are close to beneficiaries in their financial needs. And we rely on them for sourcing. And so I'll provide some examples of that later on, I promise.
That's perfect. Yes.
Yes, good morning. My name is Christian Jahn. As it was mentioned, I'm the head of a GIZ-supported program here, where we look into the financial and private sector. I only arrived actually in January this year, and the program is also pretty new, so I can tell you what this program, so there's one aspect where we are dealing also with investment readiness. I would say that two things are important for us there. One is helping also to build the ecosystem here, I mean, with partners that are here in the room, but also with others. And second, also, we have a focus on green and inclusive businesses, where we particularly look into that, how we can contribute actually to also to definition and developing a accreditation system with the government or also development partners of and for green businesses, which then also will help them hopefully to get better access to finance. It's one little puzzle in the whole piece. Thank you.
Jean-Marc? Thank you, Christine.
secure means. And we believe that it's going to rely on external funding, but we have also to engineer ways to harness domestic funds that we have. Thank you.
Thank you so much. Thank you, everyone. I'll go straight into it and I'll start again. Jean-Marc, let me come back to you. The region faces a lot of low pipelines of investments ready businesses, and I know you mentioned quite a few things this morning. So that reduces the overall investment opportunities that we see. What are some of the causes? What are the issues that you find out there that we can take light of and a glean of so that we can move forward from that?
Thank you very much, moderator. I am highlighting from target investees. So as I said this morning, there are some gaps when it comes to governance and management skills. So according to a survey done by Global Impact Investment Network, they found that in many enterprises, local enterprises, entrepreneurs will appoint their relatives to the board or senior management position and will not consider hiring appropriate trained and skilled people. So that's a serious problem. So the second one has to do with the weakness of the business system. By that I mean there is no sound overall financial and human resources and operational management that really prevent harness the potential of impact investment and also to design some projects that will attract the attention of capitalists. The second one is the difficulty of sourcing capital. As you know, West Africa has shallow capital markets, so it's very challenging for entrepreneurs to raise funds domestically. So they have to rely on DFI or foundations, and most of them don't have local presence. So it becomes very difficult. So this is a situation that really makes it difficult to come up with very strong, sound impact investment program. Third, I will mention the macroeconomic stability. Somebody mentioned earlier that there is need for economic diversification in most of the economy. That's something that applies to West Africa, but also to Africa in general. We rely on in-process products. Those products are very volatile, and we are vulnerable to macroeconomic shocks. So it becomes difficult as we rely on DFIs for foreign foundation who want to lend in foreign currency to obtain loan in domestic currency. And given the macroeconomic instability, volatility, there is an exchange risk of devaluation. So that makes it very difficult. So the other thing has to do with regulation. When you look at the way interest are,
Yeah.
it's about 20%. It makes it very difficult.
Yeah.
Within the lastly, there is also a question of perception. I think impact investment has to gain credibility. People will look at it as philanthropy, whereas it's profitable and also address a very important concern. I think
100%.
those five events entrepreneurs come up with some project. Thank you.
Thank you so much. I'll come to you. Yeah, I heard one of the entrepreneurs yesterday, Constance Swadika, speaking, and some of the things he's mentioning, and I mean, what she talked about yesterday. We know that we need to grow businesses, we need to build their capacity and tap into the expertise that we see. But what I'm asking here is how can the foundations and this development finance work with this enterprise supports organizations to enable them grow? And how can we manage those enterprise support systems as well? Because one of the issues Constance mentioned was that who is managing them? Who is, they tend to do things on their own and nobody knows if it's good or if it's bad. So what do we do different? Yes.
Yeah, I think I can reference a lot of the work that Impact Investing Ghana has done under the leadership of Amalate and the group, and also the NAB in Nigeria. There's a lot of work going around, the quality issue around entrepreneurship support organizations, how we do things, what frameworks are we working with, what are the global examples of what works and what's effective. So we found from the scale model that our Gideon's Foundation is promoting that, the ESOs that are doing well tend to charge for their services. It may be a nominal fee, but when you do free stuff, people tend to not show up. We're currently doing an investor readiness program as we speak with the UNITC, and it's free, right? But you find that the commitment levels are quite low from those who kind of show up. So those are the kinds of things that we need to maybe look at a bit more closely, but I know that we're working towards streamlining the quality and framework that we were all working towards. So that's one of the things that we're doing. Another thing that we need to look at is really the operational capacity of our SMEs and access to services. So Scale Up Africa, we do a lot of operational support, business process design, redesign. You go into a company, it takes time, it takes money, it takes people who understand how to operate a business, right? You may have a fantastic business, you may get investment, but you'll find your money is wasted because you don't have any processes to speak of, you don't have systems. So how do we get more DFIs and foundations to really fund those kinds of things? Those are the kinds of services that SMEs typically cannot afford or don't have the, even the knowledge. So if you're an investor backing a startup or an SME, you would benefit from having a service like ours to sort of lower the cost of getting that operational capacity and accessing, talent like you would with a bigger company, a CMO, a CTO, a COO. These are all beyond the reach of many companies. So I think these are some of the things that DFIs and foundations can do and partner with organizations in the ESO space to get better at doing.
Fantastic, thank you. Kristen, I'll come to you. And I just wanted to ask, is this something that GIZ can do? When she's speaking, I know that you said you're new here and stuff like that, but is this something that can be put into the pipeline? And then also, the capital from the foundations and the development finance can do a lot. We know it can. What is currently being done under GIZ, and how can we see and benefit from those things?
Yes, thank you. Yes, we can do. I mean, beside the program I was just mentioning, I mean, GIZ is also active in other areas, especially in the agribusiness sector, I think, where we also contribute to supporting companies to get investment ready. I mean, where we take them along to a certain path, where we, through capacity building measures, etc. But we always have a challenges then really when it comes then really to connect, to make the connect to the investors. That is often lacking then in our part, I would say. That is also something we would like to look into with this new program, where we also want to look into access to green finance. How can we contribute to that? Also walk with the companies at least for a couple of months and make them investment ready. So this is on that part what we could do. And on the other hand is the other question what you mentioned. I think yesterday it was also said, and this morning a couple of times. If you look at the gap of financing SMEs alone in West Africa, if it is now 250 billion or 350 billion, depending on to whom I talk, it doesn't really matter. And this morning it was also presented the gap for financing the SCG. We talk about on a global level also with impact investment. But I realized how difficult it is always to talk to until we realize that the others are actually not understanding what we are talking about. I mean, it can take months or years. And that is, I think, something we have to focus on to learn to speak the same language, make clear that that we really understand each other. And that is related to impact investor, government, DFIs, development partners, government, companies. But I also would like to put a little bit on my opinion, I think what we can focus beside focusing on impact now when we talk about impact investment is also that we have more blended finance mechanism. I think this is still a huge potential. that can be tapped. And also, there's always some new innovative vehicles coming up or systems that I just would like to mention. What has been developed with Roots of Impact with the Swiss development organization, actually, where they actually give some reward the impact through impact-linked finance, meaning linking the interest rate of a loan actually on a predetermined impact performance, which sounds actually quite easy, but it's something I think very interesting and can be looked into. I just want to leave it at that.
Thank you, Kristen. Tracy, I come to you, and I'm not throwing you off the panel. We need your examples. What can we do? What more can we do? How can we support? What can we do different? And based on what you know and what you've seen across board, I mean, in the work you've done across West Africa. So what do we do? Yes.
Thank you for that question, because I have notes prepared for that. Phew. So I won't get thrown off the stage after all. There are two things that I want to talk about in terms of helping foundations and development actors and donors to development actors to think about how they can help build pipeline, especially for investment-ready enterprises. And there's two high-level topics, and then time permitting, I have three practical examples, but you cut me off if I'm running on too long. So first of all, I think when it's possible, bundle capacity building with financial resources to avoid a development and a finance disconnect at the end of incubation or acceleration. The entrepreneurs are raring to go, and then there's nobody who's got the growth capital for them to move forward. And I will say on our two blended finance vehicles, we have a sidecar on each of them. The build fund, which is geared towards corporate actors, has a TA facility for pre and post investment assistance, which can be geared towards basically business problems, not necessarily the technical problems of specific to the sector they're operating in. And also we have a blended finance facility for project finance, and that has a project preparation facility as well, keeping in mind that missing middle projects are often woefully underprepared compared to the larger ticket project finance that's getting done at the DFI level. So at the full-on DFI level, because we're mini DFI. And so that's one concept. Or also like She Equity yesterday is a great example too. They're an accelerator that has a fund built into the end of the acceleration. So that's like a natural fit. The second comment I want to make, and that's going to get into some of these practical examples, is we need to get more creative. And so I would like to call on development actors and the donors to, start thinking outside the box in terms of program design. Yesterday, Amma said, break the rules. And Sam said, don't break the rules, but let's get creative. And I think here are some examples of where the donors have been creative about it. So in Burkina Faso, Luxembourg has wanted to fund renewable energy uptake. And an old school way of doing that, a development project would have been, let's give grants to, let's say the supply side, to renewable energy companies, and then let them get out there. So the way Luxembourg, though, set it up with UNCDF was they issued a challenge fund, and it was open to incubators and accelerators, to FSPs and PSPs, sorry for the jargon, financial service providers and payment system providers. And it was open to the energy service company, the renewable energy company. So all three facets. We received, and they could apply for a grant or a loan. And so there were 53, now I got to look at my notes here. There were 53 applications. And let's see, finally 3 incubators were selected. 9 energy servicing companies or renewable energy companies were selected, and 2 FSPs and 1 PSP were selected. The ESCOs and the FSPs, PSPs were able to get incubation and acceleration from the accelerators that were part of the award. 2 of the energy services companies took loans right out of the gate, and a third entity, which has gone through incubation, is now requesting a loan and being considered for a loan. So I think that's a really novel approach that works well. And so if we could use challenge funds more that have more innovative financing involved than just straight grants that can be kind of distorting to the market, it's not necessarily rocket science. If you're a UN agency and that's intimidating, we are a bolt-on that can come on and do that investment, demystify the investment stuff. But even if you're another development actor, we could be the bolt-on to the end of your acceleration. But we don't want to cannibalize. We want the local actors to do that first. But as a last resort, we could come in and do that. Here in Ghana, there's a project called the Green Project that is funded by the EU and the Netherlands. And SMV is doing some acceleration, youth skills building for employability and acceleration of SMEs. UNCDF is offering innovation support to FSPs with digital solutions that can service these entrepreneurs. And we have just last year did an expression of interest, a call for applications to digital service providers in a range of sectors, but including green areas. We got 93 applications. About half of those, less than half of those were shortlisted.
Yeah.
4 have moved on to consideration for investment due diligence. 1 has been awarded, and our build fund, our blended finance vehicle, has come up with a fifth entity. And then also similarly, if there's still time, in Sierra Leone, we had actually we were teeing up for an agriculture program with WFP. FMO had some funds available. It's around the value chains in ag, but they have a big access to capital problem. And the MFIs that can service these really earlier stage companies don't feel super comfortable and don't necessarily have tools, digital tools that make it easy for them to do the credit work in the remote areas. So FMO gave some funds. We did another expression of interest. Actually, there it was called an RFA, but all of these are kind of the same way of saying an open and transparent competition to invite candidates to apply.
Yeah.
And we had 6 MFIs that were found eligible. 2 went to due diligence. 1 loan was awarded. So, and that's going to help tee up again this WFP agriculture work. So, those are some examples that, if you have any questions in the Q&A or later on in the meeting, happy to talk more about it. But I think
creativity is key. Yes, it's key. Thank you so much. I think we'll just throw it now and see if we have any questions. And okay, so I have one person there. So we'll take one question and then someone else there. So I'll take the gentleman. Okay. Lady first, and then I'll go to the gentleman.
Good morning, everyone. My name is Tale Alimi. I run a fintech for inclusion startup. Our first market is Nigeria. So funny enough, I'm a beneficiary of the share equity. So I went through the acceleration program and I got the the share equity investment. So that's a very good example. However, from an entrepreneurial perspective, how are you, in terms of creating entrepreneurial pipelines, how are you thinking about guiding entrepreneurs to know what type of funding they actually need? Because I think that there's a gap between this creative funding or financing and what entrepreneurs really need. Okay, because I think that a lot of us, what we do is just apply for stuff and just try and then feel like if we're lucky. But I think that there should be a more systematic approach, and it should come from the maybe the ESOs or the DFI. So how are you guys looking at that?
Amma can take that. Amma, just wait. Can I take the second question and then so we can do everything together?
Yes, good morning. Thank you. My name is Aziz Ahmed. I work with the Landscape Resilience Fund, and this is a blended finance vehicle that has been set up, managed by South Pole and WWF. So it's based in Switzerland, but we are now looking to do projects in Africa and in the global south. So we have a peculiar challenge, which I want to pose to, I think, the GIZ and the UN rep there. You talk about green businesses. So my question is, what do you see as green businesses? Yesterday, we were here and the discussions were about, I had fertilizer issue. Obviously, in our agricultural production systems, we do chemicals, pesticides. For some of the projects that you are looking at,
yeah.
do you consider these as green businesses?
Yes.
Or there is a plan to actually transition?
So what do we see as green?
Yes.
Okay. All right then. Thank you. So I think we'll take those two first, and then I'll come back to you. All right then.
Thanks, Asai. So to the lady who asked the first question, creativity is really key and experimentation is key. Giving DFIs the space to create and allow us to create solutions from the ground up is very important. I'll give an example of the European Union that televised a circular economy competition on national television, right? It was like a Shark Tank sort of format. We've seen it across the world. It works. It translates the messaging, the key issues. It educates, it entertains. And then you get people responding to the calls for proposals. What are you doing already that's working in the green economy or the circular economy? And then, we had about 700 applications nationally. We had the top 20. We took them through a lot of business process work and, mentoring and incubation. And then the EU ambassador really drove the awarding of 100,000 Ghana cedis for the winner, who happened to be a fantastic team from an underrepresented community in the north of Ghana, addressing period poverty. So these are creative ways that we can sort of present some of the solutions in terms of what's out there, the kind of funding that is out there, pretty unrestricted funding as well. The 100,000 is for them to really, improve their processes, their marketing, their packaging, a little bit of equipment purchasing, infrastructure is very key. Productive assets are key as well. So it gives them the freedom to sort of have, the space to create and build their businesses. So that's one sort of way that we can promote the types of funding that are around. Most of them hadn't heard of venture capital, private equity, seed capital, Series A, B, C, all of these, the lingo that we speak about all the time. Most young people and entrepreneurs have no idea about it. All they know is that I want a loan, I'm going to go to my bank, it's up to 30% interest, or a microfinance institution. Exactly. That is not accessible or right for any business in the current environment. So that's one way. I think you spoke about green business, the gentleman over here. Again, GIZ is actually a client of ours. We've done quite a bit of capacity building with, informal associations across the country to build their capacity in understanding what is green. The use of organic fertilizers. How do we use all this waste from all the farms we have across the country to produce organic fertilizers as a response to what is happening globally with the fertilizer price hikes and distribution challenges. We don't have availability. So it's really making the cost of production of basic food extremely expensive, unprofitable for farmers. And of course, we talk about food insecurity as well, which is a major challenge. So all of these are sort of intersectional issues. But, we should encourage more of our clientele. We have access indirectly to 1 million farmers through our network of business associations that are in the communities. But they are in dire need of actual solutions that can be locally sourced and scaled up for them to lower the cost of production and promote green agriculture.
Thank you, Emma. Do you want to add anything to that? Because we have two other questions. Yeah.
Maybe just quickly, because, just quickly to the green business definition, that is exactly also one reason why we said we wanted to start actually to look into to find a common understanding here in Ghana. What do we mean actually here in Ghana when we said we support green businesses? That was one reason, because there are some general definitions where a lot agree, but it's really not clear. So that is why we thought it is a good way of bringing all the stakeholders together and defining what do we mean actually with green business. But I also wanted to address the other point of the lady there, because it was also, the question was also related to how can we support actually companies in finding the right financing vehicle. No? And that was also our experience actually previously when I worked with IBAN, where we helped companies in investment readiness. It really showed the more time we invested in the companies at the beginning to find out what are their needs, and then looking for the right investors actually and vehicles, the bigger the potential was, then actually that at the end of the day there was really a deal made. So that is really something. I mean, really looking into what is the company, what is the need of them, where are you at the moment, and then looking into it. What can be maybe what is the best solution for it. And that brings me again to the point of ecosystem. It's important that we are aware of the ecosystem of the players to make referral, because one organization cannot cover everything.
True.
But we have to make the referral then to the corresponding organization.
Fantastic. I think that's really, really apt. So I'll take one question there.
Okay, thanks, Asai. The question, comment. My name is Ruka Sanusi from the Ghana Climate Innovation Center, where we incubate climate entrepreneurs from across Ghana. One of the things that I've heard on this panel today, and I keep hearing, I was somewhere 2 weeks ago that said the same thing, that businesses lack investor readiness, and there are no investable projects, particularly around climate. But might I suggest that it's your funds that are not disbursable, as opposed to saying that the SMEs do not have the conditions precedent that you need? It's something that we've been hearing for decades. A lot of businesses here today, and a lot of them have a lot of fatigue because the demands keep growing. Yet we have an economy that is depreciating, declining at rates that you and I just know. Inflation is 50%, the currency is depreciated. But the small and growing business sector contributes 70% to Ghana's GDP,
Yeah.
83% of the workforce. If we keep imposing almost impossible conditions precedent to disbursement and saying that people are not investor ready, and not even willing enough to look at the contextual factors in how we support them, because we're talking about impact investment. 70% of GDP, they're the ones that have the potential to really catapult our economies.
Yeah.
So I would also want to suggest, even though I'm a speaker on the next panel, but I have this opportunity to vent before I come to the panel and show some.
We hear you, okay. We do hear you.
So look at our funds.
Yes.
And make sure that Okay, thank you.
Thank you so much. I mean, you're so apt. I mean, we had the same conversation, and I think that's why I mentioned Constance yesterday. I mean, I could see the frustration in her face as she was speaking, and I know the entrepreneurs are getting to that point. I think we have one more question, and then we'll shut down. Yes. Jean-Marc, are you still on? I'll come to him after.
I would suggest that what we should do, there was a proverb that was released yesterday. When you want to do a new project, there's need for us to consult with the real stakeholder, that is the practitioner, and know what the need is. Because I know once those projects TOR are set, you don't want to go against it. And that has been the issue all the time. Yes, it's not in our budget. It's not in our proposal. It's not in our this. It's not in our that. So you don't, as my language say, you cannot do my hair for me at my back. You need me to be there.
You can't shave my hair for me.
You cannot.
From the back.
I need to be there. I need to tell you, no, right way, back way. Let's
I like
do it together.
Yeah.
Yes. So when you do that survey with stakeholders, that is this SME,
yes,
you are able to fashion out a good TOR that will work for you and me. Thank you.
Thank you. Thank you so much. One more and then, oh gosh. Okay.
Thank you. My name is Matthew Ajay from Oasis Capital. I can align with Ruka, but as a financier, we would always finance businesses after they have passed the viability test and sustainability test, whether it's for profit or for non-profit. Otherwise, we are being irrelevant. So what we need to understand is that developing and building business and bringing it to a bankable state is a different segment and industry. So perhaps the financiers need to begin, and all of us in the ecosystem, including government, that have responsibility to ensure development of enterprises, would begin a process of trying to establish institutions that support. There are some of them already there.
Yes.
To get the right support so that we can get the financeable business to give them the money. One of our biggest problems, if you ask me, what is your biggest problem as a private equity practitioner, is pipeline.
Yes.
Because you can't come and tell me, oh, it is viable. Right. Somebody said before him, oh, my business is worth $10 million when he has not even started. I must, because I sit in a fiduciary position where I have to return the capital.
Of course.
And I cannot just go out throwing away money. But we need that institution that presents something that allow us to be able to fund these businesses.
Thank you. Thank you so much. Jean-Marc, yes, can you just, and this is the last throwing. Yes.
Sorry, I just want to throw a bomb in the midst of it because I've lived, or I live on all sides of everything that we're talking about, from being an entrepreneur to being chairman of a bank and chairing the NAB. The reality is this: every business understands the need to invest for business development. And one of the things that the financial sector has not taken seriously enough in the context of the environment of their market is the fact that that pipeline, you're waiting for other people to pay for the development of the pipeline that you want to take value from. There is absolutely nothing that says that the financial sector decides that 1% of profit after tax on an annual basis will go into the development of businesses to create the pipeline. And ultimately, who is going to benefit from it? The financial institutions. So it's really, the bottom line is we have an environment where there's an abundance of entrepreneurial knowledge. There maybe isn't there's an abundance of entrepreneurial passion. Maybe there isn't enough of entrepreneurial knowledge that allows them to build in a format that they become more attractive to you. Now, once you identify that you have a shortage on a side where you need value, if you're building your business for the long term, you absolutely lose nothing. You can put some money forward and find matching funds that help to support the growth of businesses in a scalable format that makes it easier for you to find the pipeline that you want. But absolutely, as a financial sector, it is something for this part of the world we actually have to make a deliberate business action, but we haven't.
And that's where we'll end. Thank you so much, Mr. Oshka, and thank you to my panel. We've had an interesting conversation this morning, and we'll move on to the next one. Thank you so much.
Thank you. Thank you, Osai, for the expert moderation. Please step out. They'll do the photos. And while we go straight into our concurrent, we have 4 concurrent sessions. So right here in Omanyi 2 and 3 is the Anglophone panel discussion on building climate resilience and driving climate change driving climate action across West Africa, the role of impact investing, to be moderated by Osarume Akenzua. The speakers are Edwin Zukujo, Elizabeth Baini Emisa, Rukaya to Sanusi, Bankole, Oloruntuba, and these are our speakers. Bankole is joining us virtually. The rest will be here, and they'll be joined by Osarume for that conversation. So if you hear your names, please come up onto the stage for the Anglophone panel.